If you have or feel you are soon about to cease trading through your limited company and are wondering about your what next options, then stay tuned. In this video, we will cover keeping your company open, active, and repurposing it, switching your company to dormant status, putting your company into a solvent liquidation, and we've prepared a free PDF guide for you to download, putting your company into an insolvent liquidation, and finally, can you sell your business? An often overlooked option when it comes to ceasing trading. So be sure to watch right to the end of this video. Before I get into today's video, be sure to hit that subscribe button as well as the notification bell to make sure you're kept up to date with all of our latest content. This really helps us to produce more helpful videos and to get you free quality advice from real qualified accountants. So this might sound counterintuitive, but if you have ceased trading, then keeping your company open and active is still an option. Why and what for, you may ask? Well, it depends on your circumstances. This option will only work for you if your company is solvent and if you're not planning on using your company for the same trading activity that has just ceased. Then you can repurpose your company for a different trade or activity. For example, if you were a one-fee earning contractor of your limited company, your contracts have ended and you're not looking to go back into it, then you decide you want to start a new e-commerce business as soon as possible, selling online through Amazon, you can repurpose your existing company to do this. So what exactly is dormant status for your limited company? The Companies House official definition is if it's had no significant transactions in the financial year, and significant transactions don't include filing fees paid to Companies House, penalties for late filing of accounts, money paid for shares when the company was incorporated. Otherwise, any other transaction could be considered significant. And according to HMRC, your company is dormant when you do not receive a notice to deliver a company tax return or are not expected to deliver a company tax return. Remember, you can only file dormant accounts from the beginning of the next company year. So let me explain this with an example. If your company year end is the 31st of March and you cease trading on the 2nd of February of the same year, then you cannot simply declare or make your company dormant from the 2nd of February. Even if you do not trade between the 2nd of February and the 31st of March, for the company year to 31st of March, you will have to file sufficient accounts and a company tax return to both Companies House and HMRC. However, if by definition your company remains dormant in the next company year, so the 1st of April to the 31st of March, then your company can file dormant accounts to Companies House and doesn't need to file a company return to HMRC. The advantages of placing your company in dormant status is that there are less filing and compliance requirements and most likely fees as a result. It keeps your company on ice, if you like, and allows you to retain any assets, both tangible and intangible, such as the company name. If you feel you no longer need your limited company or just don't want it anymore, then liquidation is perhaps the most viable option. Remember, you cannot just close your company by filling in a form and walking away. There is a process to it. There are generally two options available: an informal voluntary strike-off and a members voluntary liquidation, also known as an MVL. The former is fairly straightforward and is often suitable for companies that have less than approximately £30,000 in distributable funds, whilst the latter is more involved and advisable for companies that have at least £30,000 in retained distributable funds or assets, as the tax options are more favourable. A members voluntary liquidation has to be carried out by a licensed insolvency practitioner, so it's not something you can tackle yourself. Now, with either of these options, there is still a lot to consider for you. We've put together a free, helpful PDF to give you an insight into solvent liquidation options, as well as some more information about the associated taxes and how to get started. Click on the link to head to our website and download the guide for free. An insolvent liquidation is far trickier. By definition, an insolvent liquidation means that a company is closing because it cannot pay its bills as they fall due, or the value of the business assets is less than its liabilities. Now, there's two broad scenarios here. Either your company is forced into liquidation by a creditor, known as a compulsory liquidation, or you as a director instruct what is known as a creditor's voluntary liquidation, or a CVL. When your company is forced into a compulsory liquidation, quite often affairs are tense and your costs as a company owner will probably be higher due to the legal action creditors will take. We can only strongly recommend that you avoid this route as best as you can. If your creditors are starting to threaten and turn up the heat with regards to the money your company owes them, then it's always best to open a dialogue with them and attempt to go down the CVL route. Is this really an option? Even if you're a one-person direct employee with no future revenue or profits, and what if your company has debts it cannot pay? Well, in theory, yes, it is possible in any situation to sell your business and company. It all depends upon whether there is a willing buyer who wants something your business has. Now, let me clarify here that selling your company entails a sale of all the share capital. So in other words, the business and company as a whole. There is also a sale of assets, which is different from a sale of share capital. So what is it a prospective buyer could actually want? Well, for the most part, prospective buyers will want a profitable company with assets and a future revenue profit stream. That's just traditional economics. But not all buyers. Some buyers may want other tangible or intangible assets your company has, such as a client list and the relationships, intellectual property, a concept that they cannot copy easily, a license to a product or distribution service they cannot otherwise get. And even your company name could have value for someone. The list goes on. In reality, unfortunately, not many limited company business owners even explore this option. And if you don't even try, then who knows if this could have been a missed opportunity for you. If you don't know where to start, we've partnered up with a reputable business broker who can provide you with a free no obligation consultation on whether your business is saleable and if there could be any potential buyers for it. I hope this video has helped you consider your options if your business has come to the end of its journey and taken you one step closer to knowing your numbers. As always, let me know in the comments your thoughts on today's video or if there are any topics you'd like us to cover in the future. Finally, be sure to like and subscribe as this really does help us to get our content out there. This is Tony D'Angelo for the Accounting and Tax Academy. Thanks for tuning in.